You're listening to episode number 23 of the AlaREIA Masterclass podcast. What's going on, everybody? It's Brian Trippe. I'm right here in beautiful Birmingham, Alabama. Thanks so much for joining us today. We've got a great guest. We're going to talk about insurance. We're a real estate show. We got to kind of talk about a lot of different things. So we're going to talk about insurance here in just a little bit with Mr. Joseph Buff. But I want to just make a couple announcements like I always do. Our next REIA meeting, our next AlaREIA meeting is actually going to be this Thursday. Mr. Claude Diamond is coming all the way from Denver, Colorado to talk to us about sales and marketing. He's the marketing guru, sales and marketing guy. You cannot miss this. It's actually going to be really full in the room. There are a lot of people. He's a nationally renowned guy. I know a lot of people that are going to be coming. The room's going to be really full, so you be wise to get there a little bit early. He's going to go on around 6:30. Our doors open as early as 5 p.m. for networking, so you do not want to miss this. He's not there to sell you anything. He's actually going to come in here as a personal favor to me, and he's just going to come and just give us just phenomenal content. If you don't know who he is, Google him right now. His name's Claude Diamond. He's been on our podcast. Just a great sales and marketing guy. We got that going on. We got our REIA meetings. Obviously, we got our podcast. We are up and going, and it is going very, very well. Has a lot of positive feedback. So get in touch with us if there's like a subject that we haven't touched on, so we can bring in an expert. Also, don't forget our daily REIA show. That's coming out just a few times per week. So you can check that out on our website, alareia.com, ALAREIA, or you can check it out on our YouTube page and our Facebook page as well. So I want to talk to our guest today. Joseph Buff is joining me here in my office. How's it going today, Joseph?
Morning. Going good.
Good. We've got to talk about insurance at some point. And Joseph sponsors our club, our REIA, and I use Joseph. I use his products and his services, and we really don't bring in anybody to sponsor our club. We bring in people that we actually use and that we endorse, not just because he's paying us, but because it's a great service and we like it. So Joseph, just kind of give us a little bit of background about how you got started writing insurance for rentals and flips and homeowner insurance.
Yeah. Well, I've been an agent for 7 going on 8 years now, and before that I was in banking and I dealt with some investors, and so it's kind of a natural fit just to kind of explore that option on the insurance side. And once I started my farmers agency, I found that we had kind of a niche in that through Foremost primarily. So I got involved with a couple of groups in town and just really started working that, and kind of cut my teeth in the rental, the rental and vacant market, where a lot of agents don't like to do that. I found it was a good niche that we had, competitive pricing. They know how to kind of price that product. So, so that's kind of how I got started with it. And of course, we do all the other traditional products, home and auto, and the last. Been in it for 7 years. From 2011, the next 4 or 5 years were pretty tough in the home market especially. So the rental market was very good for me. Kind of helped me kind of get my agency going, and I love to work with investors, and like I said, we've got some great products out there for that. So
so let's just dive right on in. Let's talk about those products, because you mentioned Foremost, and that's probably the one you'd say you probably write the most.
Yeah, Foremost, they've got their niche is going to be that $30,000, $40,000 to $60,000, $70,000 property. They will write vacants. They'll write, we can do flips through them if we're just talking about your, flooring, paint, remodel a kitchen, put a new roof on, that type of thing. They're fine with that. If you're adding square footage, tearing out exterior walls, we may have to go a different direction on it, but they're fine with the flips. The thing I like about them is it's an agreed value type policy. So if you're buying a property for, say, $60,000 and you're going to put $30,000 in it, and you just want to insure it for the $90,000, you can do that. Or if you want to insure it for market, say the market value is going to be $130,000, you want to insure it for market value, you can go ahead and bump the coverage up to market value. So they don't require replacement costs. A lot of companies, especially on your rentals, they're going to do a replacement cost estimate based on the square footage. So if you're looking at a 1,200 square foot house you're buying for, $35,000, you figure $80, $90, $100 a square foot. Most insurance companies are going to make you cover that for $110, $120.
Mm-hmm.
So cost wise, they're very good, and they know how to price the product. They've been doing it long enough to know. A lot of companies just don't know how to price the risk right, so they either are very tight on their underwriting, or they just don't like doing them, period, because they're just not comfortable with the risk involved with rental properties. So,
right.
We have some other companies that we use for as well. If you do want replacement costs, I've got some investors that are buying some nicer rentals now. $100,000, $150,000 rentals, and they want replacement costs, or maybe the bank's requiring replacement costs. I've got some companies that we can use for that as well. The unique thing, a little unique thing about Farmers is my contract allows me to access other companies when what we have doesn't fit the situation. So whether it's it's not acceptable to the client or for Farmers for whatever reason, then I can access some other carriers to place that risk, and that's really helpful. So really, it's almost like you're getting a little bit of an independent agent as well when you call me on these deals.
Right. Yeah. So would you say, I guess right now, your niche is really that rental that's in between that $30,000 and $70,000 range? That's kind of how you built your agency. Is that right?
Yeah, it really is. I mean, I would say from a numbers standpoint, right now it's probably it's been as high as 70 to 80% of what I did on a monthly basis. Mm-hmm. Now it's probably maybe 60%.
Yeah.
But on an average month, I'll write 15 to 20 rental or vacates for investors.
Yeah.
And they're calling from the local people are calling. I've got people in Utah, California. I got a guy in Singapore that's got rentals with me. So I don't know exactly where they come from, but once the word gets out that you're kind of a guy, a lot of agents just don't. If they haven't been doing it, or they're not comfortable with it. I've seen the fractional ownership, the IRA funding, the tax deeds stuff. I've seen enough of the deals that a lot of investors, the savvy investors that really know what they're doing and how they structure their deals, to know kind of how to do those deals. And a lot of agents aren't comfortable with it.
Yeah, and that experience is really important. And you're talking about writing 15 to 20 of these a month for the past 5, 6, 7 years. Yeah. I mean, that experience alone on how to write rental property, I don't know how people wouldn't use you, at least in this area.
Yeah, it's it definitely helps. And it's I've written enough of them to know generally what the underwriting guidelines are,
right,
what we're going to have a problem with and what we're not. So I can kind of head off some of the potential problems, on the front end. You kind of have to look at the insurance companies, and a lot of people, and I agree, real estate is a safe investment. You got a fixed asset and tangible asset, but if your insurance isn't right, then it can turn south real quick. So you really want to look at the insurance company as kind of your partner in
for sure
real estate business, and so just kind of understanding how we price things and the risk involved, and just trying to, if we're saying that there's a problem as far as a liability concern, you really should take that to heart and say, okay, if they think it's a problem, that's because they've seen X, Y, Z happen, and I need to make sure this doesn't happen to me. So.
Yeah, exactly. So, and why wouldn't you do it? Mm-hmm. You would want to do that to not only protect your investment, but to protect you.
Yeah,
for sure. So let's kind of dig in just a little bit more and kind of talk about that. You're talking about your insurance company is kind of your partner. What kind of like liability stuff would that product that we've been talking about, the Foremost product, like there's a liability component to that as well, correct?
Yeah, your basic policy with them, they have two different policy types. They have a what they call a dwelling fire 1, which is a name peril policy. So it's going to cover whatever's named in the policy: wind, hail. You can endorse vandalism, you can endorse liability. So there are some situations where certain things aren't covered. The Dwelling Fire 3 is a more comprehensive, and if you Google HO3 or Dwelling Fire 3 or whatever, you can kind of read through those differences. Mm-hmm. The biggest difference in those two products are there's some additional riders available on the 3, and I try to write everything as a 3 that I possibly can, and then sometimes they'll come back and make me change it, but I try to go with the 3. The biggest thing that it covers that I've actually seen happen is if you have a burst pipe and water tears up a bunch of flooring, the 3 will cover that, the 1 will not. So that's one of the things as far as coverage wise. And on the liability side, there's 2 different liabilities that form most policy. Most of the time, most investors are opting for the premises liability, which is your slip and fall, traditional, lawsuit stuff where somebody's injured on the property. And around that, if we've got liability on the policy, there's certain things that they're going to look for. They don't like, certain breeds of dogs, pools. I would say if you can not buy a rental with a pool, I just wouldn't do it, because you're either going to have to exclude the liability or you're going to have to remove the pool. It may sound like a good idea, but even on a flip, you're going to have to exclude the liability for that portion of time that you've got that property. And some people think it's worth the risk, and I don't know. I've seen people or heard people that said a pool made that big of a difference in a resale flip. But so those are a couple of the things. Broken down appliances. There's things that tenants do sometimes after the fact that if you don't knowingly know that it's there, you say you put it in your lease that, hey, we don't want any breeds of dog, this certain breed of dog, no pools, no trampolines, no broken down appliances in your yard. If you've done your homework as far as putting it in the lease, and something happens, then they're gonna back you up on it. But yeah, those are the things. The other type of liability that you'll see that's available through Foremost, we don't sell as much of it. And honestly, I probably should mention it more, is a personal injury type liability coverage, and that would be your wrongful eviction, discriminatory lawsuits, and things like that. So if you're managing them yourself, somebody can throw one of those lawsuits up over some little minor issue, and the bottom line is you got to defend it. And if you have that coverage on your policy, they will defend you on it. If you don't, you're kind of on your own. You got to defend it.
So primarily what we've been talking about so far is rentals, and I want to kind of keep talking about rentals just for a little bit more. So give us kind of a sense of what someone would pay for a coverage like that, maybe even that second type that you just mentioned. What would I pay for, because I feel like the bread and butter rental is going to be a $50,000 to $60,000, maybe even $75,000 rental house here in Birmingham. Would you say that's about what you're?
Yeah, that's typically what we see. I mean, honestly, if you're getting into $20,000, $30,000, then they'll write them, but a lot of times there's going to be some underwriting issues and things that we're going to have to correct. And so we want good, solid risk. We're not. It doesn't have to be a brand new house, but we're going to look at the condition of the roof and make sure there's no rotted wood and siding and things that are going to be a potential problem or potential claim waiting to happen. So, but yeah, premium wise, I would say $50,000. Now, there's a lot of discounts and things that once you have multiple policies, if you're using a property manager, there's a lot of discounts that you can, if you have other policies, home and auto or things like that with farmers. That will qualify, but I would say a $50,000 rental with say $300,000 liability is probably going to run somewhere in the six to 700 range. 75, maybe 750 to 800. So and there's some credit factors. I mean, I saw one in a lady in Shelby County. Now, this was a house, and I know the counties do affect it, but there's a credit factor involved. If you got really good personal credit. I think this house was $90,000. It was like 600 something. So
that's really good.
You can get some pretty decent rates. If you've got good loss history, depending on where the property is. But from what I've seen in Jefferson County, I would say $40,000 to $60,000 come around anywhere from about $550 to $750. And
then they've got options to break that down into monthly if you even wanted to do that.
Yeah, we do a lot of monthly with them. The flips. A lot of people like to do monthly on those just because they're not going to hold them for more than, if things go well, they're not going to hold them for more than about three months or so. So we'll do monthly on flips or maybe quarterly pay on flips. They have a minimum policy premium. I know we're talking just about Foremost here, but minimum policy premium I believe is $100 on rentals, and I believe it's $150, maybe $200 on flips. So essentially, if you buy that property and you flip it in a week, they're going to hold you to a minimum premium just for writing the policy. So typically after a month or two, you've already kind of exhausted your minimum premium anyway, and it's not an issue. But I do have some customers, if they're doing a lot of flips, we'll do what we call a scheduled policy, to where we'll start kind of a master policy, and we'll take those locations, and they just call me and say, hey, I bought XYZ property and I sold XYZ property, and we just take those off and interchange them, and that way you've got one policy, one monthly bill. It just kind of rolls off as you add and take off properties, and you have one minimum premium, policy premium on that. So if somebody's buying 2 or 3 flips a month, we might go that route on that.
So what about, kind of define for me like an umbrella policy, or if I had multiple rentals and I'm using you, how, like, define that, and am I really going to save a lot, really get a good discount doing that?
Yeah, you can see, the liability wise, if you're, and I do have a lot of people ask about umbrella, whether it be if they're writing these in their personal name. Foremost requires, the one thing I don't like, and I've talked to people that develop a product, they've called me because I write so many, and hey, what do you see, and what would you like to see? And this is one of the things that I've mentioned to them is, if somebody has 15 rentals, one blanket liability limit is what I'd like to see. And probably if they did that, they would just adjust the price. It may end up being the same thing anyway. But the way it works now is each property has their own liability limit. So if we put if you've got 10 rentals, we're going to have to attach liability to each of those properties. And if you go to do a personal umbrella or a commercial umbrella, most umbrella policies, and of course umbrella, we're talking about an excess liability policy. So if you get caught in a situation where your underlying limit on that particular location gets exhausted, it maxes it out, then it would go to the umbrella policy, and then they would defend any funds over that. So, most umbrellas are going to require that you carry a certain amount of underlying limits, and usually those limits are $300,000. We can actually go up to $1 million on the foremost policy itself. So we generally can cover it pretty well liability wise. I've had some customers that literally that's all they're concerned about is liability, especially on $15,000, $20,000, $30,000 houses, and they'll put kind of bare bones policy on the actual structure, and they'll max out their liability coverage, and that's perfectly fine too. We can do it that way. So
yeah. Tell me about, so this is something I've been confused about. I don't know if other people have the same question. So you're talking about kind of coverage amounts. So say, I've got a house that I paid, maybe I've got a mortgage on it, so I need to really think more in terms of mortgage. If the worst were to happen, I've got to make sure that the mortgage company gets paid off. Say I've got a $40,000, $50,000 mortgage on a $75,000 property. What kind of coverage amount would you recommend for something like that, to make sure that $50,000 gets paid off? Because it doesn't, just because I cover it for $50,000 doesn't mean I get a $50,000 payoff. Is that right, or no?
If there's a mortgage involved, the check is going to go to the mortgage company and you, and so essentially, in that case, the mortgage company is either going to come out and make sure you repair the property properly. If they're going to, otherwise they're going to want you to pay, and sometimes they'll want you to pay down the mortgage by a certain amount. But most investors, what they're doing is you always want to at least cover your mortgage amount, and then the lender's going to require that anyway. But sometimes I've had a couple situations where somebody had, say, $30,000 on a house, and they had one lady had a partial kitchen fire, and to look at it from the outside, didn't even look like there was anything wrong with the house. But that kitchen fire and the cleanup and everything involved actually totaled that house out as far as the insurance is concerned. So at that point, we just gave her a check, and then she can go do what she wants to with it. She can go, it's kind of you can buy them cheaper than you can build them, philosophy. So she can take that $30,000 and go buy her another rental and get the same income rather than trying to rebuild that house for $80,000.
So I guess the question is, how much do I need to insure it for a property to make sure I get a specific amount? Is there a discrepancy in that?
Well, they want to go up to market value. Now, there's differences in market value, so it's really kind of left up to the investor on what they're comfortable with. Now, you definitely don't want to be out money if something happens.
Right.
If you've got a purchase amount and improvements, I'd say that's the bare minimum you want to cover the house for.
Yeah.
But if you think the house is worth, especially on a flip, if you think this house is going to be worth $100,000, you've got 60 in it. I have had some investors to say, well, I'm going to go ahead and cover it for 60, in case something happens, I want my profit too,
Right.
So, and as long as that's within reason, as long as we're not inflating numbers and we can show where the improvement's been done, they don't have an issue insuring it that way.
So I guess what I hear you saying is if I've got a house that's worth $75,000, I insure it for $75,000, the house blows up, whatever, blows away, or it catches on fire and it burns to the ground, I'm getting a check for $75,000.
Mm-hmm.
The whole amount. Okay. I guess I just heard in the past that you get just a certain percentage or something like that.
No. Now, if you probably what you're thinking about is, say, a traditional homeowner's policy. Say you have you have damage, whatever type. They do a depreciated settlement up front on the homeowner's policy, to where basically if it's going to cost $20,000 to fix it, and we're talking about a 10-year-old roof, they may say we're going to pay, and contractors understand this, and if you're dealing with a reputable contractor, they understand how it works. But they're going to say we're going to pay you $7,000 of this $10,000 estimate up front. Once you get the work done, you give us a receipt, we're going to pay you the difference. Now that's a replacement cost type policy, or what we're talking about with Foremost typically is an actual cash value policy. So they don't pay depreciation on partial losses without a separate endorsement. So those are some other things that are within that policy that may be more situational, may not be worth getting into. But
yeah, no, I got you. I guess I just had some misconceptions there, and I'm glad you cleared it up. For sure.
I've seen them pay, and they actually, Foremost actually do not charge you the deductible. If you have total loss, they don't charge you the deductible either, so they'll pay the full amount. So some people carry $2,500 or $5,000 deductibles, and I've seen that happen where they waive the deductible on that. So.
Let me ask you about vandalism, because I know we get this question a lot. And I want to make sure that people that are listening, because a lot of the stuff you do, right, and my rentals too, or I've got a couple of rentals that are over $100,000, but for the most part, I've got rentals in areas where their vandalism occurs.
Yeah.
Kind of what would stuff that you would write? Maybe it's Foremost, maybe it's not. I guess maybe define vandalism versus what theft. Maybe I guess is that the difference, and would it cover either?
Yeah, vandalism, I usually don't write a policy without vandalism on a rental. I mean, I just don't write it because that's it. You're right. I mean, that's the biggest risk as far as, the risk that you're most likely to see a claim on. Now, whether or not you decide to self-insure that and take care of yourself, a lot of people do if it's a $2,000 or $3,000 issue. Yeah. But typically, vandalism, the claims that I've had, and I probably have 4 or 5 of them a year, vandalism claims. And typically it involves, if somebody breaks the door in and they tear up the door frame in the process, and they go in, they steal the copper wiring or rip the wires out of the house. I've seen them where they pull the copper wire out from under the house, and that was covered as vandalism. So adjusters will look at it a little bit differently on as far as the AC unit. I guess that's the biggest one.
Yes.
If they tear the AC unit, as far as the definition of vandalism, they tear the top off the AC unit and they get in there and they take a bunch of parts out and cut a bunch of stuff out and take that, then that's considered vandalism. If they just cut the outside line and take the whole unit, by definition, that would be considered theft, which is not covered.
All right.
But I've had one adjuster told me, well, cutting the AC unit and stealing the AC unit is still, that's part of the vandalism itself. So I've seen them cover it both ways. I think if they have a good feel for the customer, and by rule, they can probably deny that. But most of the time, these guys they're tearing the units up and pulling the components out. I don't think they're interested in a working AC unit. They're interested in. I have seen a couple where they have.
Well, I've seen some where they may not be concerned with a working AC unit, but they might scrap the actual metal.
Yeah.
stuff like that. So, no, I'm glad you clarified that. So theft is not covered.
Yeah, theft is a general rule, and like I said, and now I will tell somebody, hey, if you want to file it, we'll file it, and we'll explain it, and most of the time they're going to err. I mean, they're not looking to just find reasons not to cover things.
Right.
But I did have one situation where a guy, he just said, no, that's that, and the customer said, well, I'll go find an old AC unit and throw it out there, and if he wants to see an AC unit somewhere. So, but no, typically they're gonna go ahead and pay. Now it's a depreciated settlement, so and that's why one of the reasons why they like to see the unit, because if it's a depreciated settlement, it's a 10-year-old unit, and say it's $4,000 new, they may depreciate it down to $3,000 minus the deductible, so that they want to check and balance on what they're paying
for sure.
So. But yeah, that's a big one. There's no doubt. And I would say, try. I just tell people to, do what you can on the front end, because whether it's covered or not, it's a hassle, and you don't want to have to deal with going out. You got to get a police report. You got to, and you got a claim on your record and all that. So really, the cages, and most people do those. I mean, I just wouldn't buy a house in certain areas without putting those cages on.
And those cages, I've got a guy that'll put them on pretty cheap. So if you
$300, probably. I mean, it's worth doing that.
But there's some guys that'll charge $500 to $1,000 though. So if you need a cage guy, just get in touch with me. I got a great cage guy for you. So just I guess I just want to, because you're in the insurance business, and it's like some businesses out there just have really good stories. Can you think of a really good story? Maybe a claim, maybe somebody called it, whatever it was. Can you think of just a really good story that you could tell us that might be a little entertaining, might be a little funny or something? Because you see it all. Yeah,
I've had as far as some bad claims. I did have here's a funny one that I didn't think was going to be covered. The gentleman had a party at his house, football party, and this is a homeowner's claim, a little different than rental, but. And I guess one of his guests had a pair of high heel shoes on or something that had like a tack, like a nail in the bottom of it. And basically, she kind of marred up his hardwood floors.
Wow.
All over the bottom level of his hardwood floor. And this is in a nice area, $400,000 or $500,000 house. And he didn't realize it until the next day. And she didn't realize it. Obviously, she just kind of kept walking around. And the next day when he, lighting on the floors, and he saw it, and he's like, oh my gosh. And so we actually called and filed that claim, and it was covered. So
that was with what, Farmers?
Yeah, I think that was with Farmers. Yeah. So it was a covered claim. We have the commercials for they actually have agents submit they call it Hall of Claims type deal.
Right.
And some of these commercials they put out are, people that have real stories of things that have happened supposedly. So, and I've had some liability claims, some stories where, I had a deck collapse on a house one time, a rental house, and a couple of people got injured, and it was one of those situations where the property manager probably is an out-of-state investor, so the property manager is kind of the guy that's supposed to be maintaining this property and presenting this property in a certain way.
Right.
And so really he, I think, probably ended up getting drug into it a little bit as far as the claim goes. But yeah, those type of things do happen, and they're out there. And
definitely. Well, I appreciate you sharing the stories. Tell everybody how they can get a hold of you, Joseph, if they want to use your service, or maybe they just might have a question or two for you.
Yeah, we our office was in. I mentioned I've been in business about 7 years, and we were off 280, 119 for a long time, and recently, over the summer, we actually moved to Chelsea. We had an opportunity, it was kind of being the landlord in my space. I was kind of scrambling around trying to find something, and I found that a good agent friend of mine was leaving, and he went independent. Mm-hmm. And so we had an opening down there with no farmers agency, so we actually moved our office to Chelsea. So we are at 109 Foothills Parkway, as far as a physical address in Chelsea. And, phone 701-4924. That's a good office number. That number rings both my office and cell. So if I answer and it sounds like I'm out running around, I might be. But we typically try to have somebody there all the time.
Gotcha. And then an email address maybe?
Email's jbuff, jbuff@farmersagent.com.
jbuff@farmersagent.com. We'll put all that in the show notes. And the number to reach you is 205-701-4924.
4924. Yep.
There it is.
That's it. And I know we didn't get into some of the others, but, apartment complexes, commercial space, duplex, foremost we'll do duplexes up to 4. So, keep that in mind. If it's more than 4, we have to go to a apartment complex policy. And those are, sometimes people fuss about I've got 4 units, my insurance is double, and I'm like, well, you got 4 doors you're collecting rent on, and the liability is different. When you got 4 kitchens and 4 baths and 4 families living there, it's a little different. So, but yeah, we can handle all that stuff as well.
So Joseph's he's your one-stop shop. He can pretty much. Is there anything you don't do insurance-wise when it comes to home?
Not really. Usually, I can find a place for it.
Yeah.
Sometimes somebody calls me with something, and I'll help them out. That it honestly may not be. It's probably a little bit more work involved. But if you got somebody I got a lady that's called me. I don't know how she got my cell phone number. She lives in Atmore, Alabama, and she's calling me left and right trying to get me to insure a house down there. That I'm just kind of like, really, that's probably somebody
pretty far away. Yeah,
I don't need to be involved with one in Atmore. I'm gonna try to help her another way. But now I can generally, with the multiple companies and things, other access to some other carriers I've got. There's generally not a whole lot that we can't handle.
Right.
So
yeah, Joseph covers. I think I've got 7 single family houses with him. And I've got my office building, my strip mall. I've got a strip mall with him. So I've got a lot of stuff with Joseph. If you want to get in touch with him, we'll put all that contact information in the show notes. Thank you, Joseph. Appreciate you coming on the show.
Yeah, appreciate you having me.
Yeah, no. If you guys liked what you heard, I say this every time. Please subscribe to our podcast. Rate us, review us. We love you guys. We'll talk to you soon.